All right, so let's begin the show. And in news, we have mid-cap and small-cap definitely, which are actually helping investors' portfolio to swell up. But then the bigger question is till when will we see this kind of rally and this kind of paciness? And also, if you look at the SIP flows, yes, definitely we have crossed 17,600 mark. But talking about mid-cap and small-cap category and investments and inflows in these funds, that has once again gone up. So what does this trend indicate? And is it the time for you to maybe increase your investments in these categories, or how should you be making sense of this particular rally and this kind of inflow that's been reported in December? Let's make sense out of this. I have Nirav Karkera from Fisdom with me. Nirav, hi, good evening and welcome to the Money Show. And 2023 ending, we did a discussion where we discussed about the mid-cap and small-cap rally, where we advised our viewers to maybe rebalance their portfolio across large cap. But then the current numbers that have come in terms of SIP inflows, and specifically in these two categories, have again gone, have achieved record high levels. How do you look at these numbers?
So, hi Kavita, always a pleasure chatting. So, we are at a very beautiful period when it comes to small and mid caps, right? If you look at the valuations, if you look at the signals, if you look at the opinions of everyone in the industry, everyone is talking about small and mid caps on a very, very cautious note. But the SIP book seems to have a very different story, and this is attributable to a couple of reasons, right? So the SIP book is growing for the first time in the small and mid cap segment, very specifically because of the returns and the performance that the erstwhile SIP investors have already tasted, and this has come after a rather long dry spell, right? So for the longest period in time, small cap, mid cap SIP investors did not see any returns. It is last year that they saw a good spike in returns, and so there are two sets of investors, one who were already invested and the others who were watching from the sidelines. So the ones who were already invested really tasted the returns for the first time, and then they realized that in the longer term, small cap and mid caps generally do tend to in fact outperform large caps, and there could be certain cyclicality involved at a heightened level, but still mid caps and small caps are poised to outperform that. So the ones already invested, I believe they are doubling down on their SIPs, and the ones who were on the sidelines are in fact thinking and are looking at the numbers and thinking that now is a good time to invest from a much more longer term perspective. Considering the entire narrative around how the macro tailwinds are shaping and how generally the sentiments in the markets are upbeat. Now, if you are investing for the longer time, it's okay. Whatever the valuations are now, that is, it's all right. However, there's one small nuanced thing that most people may not be paying attention to, is that although the gross flows in these categories are looking good, and we are seeing the inflows really picking pace, especially in the SIP book, there is also a fair bit of redemptions that are happening. So if you were to juxtapose a few data points and see how the total mobilization is looking at a gross level, how the net mobilization is looking, and you run a correlation with the number of folios increasing at a gross level, there is a tendency, you can sort of make out that there is chunky and bulky redemptions happening, but at the same time there are much more slightly smaller ticket sizes that are entering through the SIP route. So there is a fair sense that probably large investors and institutional investors, or large HNIs are rebalancing and churning their portfolios out of favor of mid and small caps at this point in time. But there is a very robust retail inflow that is supporting the net inflows into the category. And very recently in December, we saw an NFO also in the segment that pushed the mobilization slightly higher, and there's a fair deal of SIP flow that came in through that route also. So these are a few nuances that I thought one should highlight while looking at the flows, and especially SIP flows in the small and mid cap segments.
So although there have been, Nirav, although there have been redemptions, the kind of inflow numbers that we are looking at, do you think it has peaked out, and going ahead, maybe the same trend will be followed in large caps, or it should be a trend that should be catching up now?
So redemptions, we are indeed noticing redemptions, but I feel it is redemption from one category and rotating into other categories. In fact, there is good reason to believe that a significant amount of capital will be rotated out of small and mid caps back into favor of large caps or large cap oriented schemes. Probably flexi caps and multi caps also going ahead, because these funds also have a tendency to have a large cap bias, at least as on date. That's how most of these flexible mandate funds are being managed. So, there will be a consistent trend in terms of growth in SIP numbers, in terms of SIP towards small and mid caps. There will be some sense of consistency in terms of growth in overall assets, including SIP plus lump sum. The total flows also will continue to move in favor of small and mid cap. But we believe that going forward, it will grow at a tapered pace. So it will not, the growth rate will moderate. So although on a growing trajectory, it will be slightly modest from a month over month or quarter over quarter perspective. However, it will continue to grow, sustainably as more and more money comes into the capital market. So we also need to take into account that there's a lot of new to mutual fund money also that's coming in at this point in time. It's not just the category rotation that's happening, but there's also fresh SIPs that was outside the industry that is moving into the industry at this point in time. So that will be a very good push towards the flows in these specific categories, small and mid cap very specifically.
It is also very important for us to help our viewers to understand the kind of risk factor that might be going high in their portfolio, because these days a lot of time the kind of viewer queries that we get, Nirav, is people have multiple mid cap funds and multiple small cap funds. Also, the kind of new trend that we are looking at is having a mid cap category active fund and a passive fund. They have indexed mid caps also, since the mutual funds, the fund houses also started launching these kind of index based fund. I want you to help our viewers understand a passive strategy in a mid cap and a small cap versus an active strategy in a mid cap and small cap. Do you think an active fund in a mid cap and a small cap category could be more concentrated? We have viewers who have these both kind of fund in their portfolio, and the only reason they prefer having it is because they think because the active fund gives them a concentrated bet, and index they can get whatever they want or whatever is offered to them. So there is no chance of missing out the kind of income or profit that they are getting through this rally.
Correct. So, one thing that investors must understand that, if you're trying to play the broader rally in the segment, okay, if you believe that mid caps as an entire basket or small caps as an entire basket is going to do well, you must go through the passive route, because that gives you exposure to the basket in entirety. However, there are a few things that one must consider while making this choice between active versus passive. And the number one thing that I would strongly, put forth is that more number of stocks in the underlying portfolio does not mean better diversification always. Okay, just because you have a fair number of stocks covered does not mean that your risk is going to be optimized. There is a problem of over diversification as well. And at the same time, if you are trying to play the entire basket, so it's okay. If you're not trying to play the entire basket and you're trying to optimize your returns and generate that extra alpha in the portfolio, generating such a kicker in the portfolio would be very difficult with such a widespread portfolio that a passive fund typically tries to offer. Right, so there's a very conscious choice that you need to make. Right, you're either playing the basket or you're playing select themes within the basket. Now, there are a few fundamental reasons why many actively managed small cap and mid cap propositions are also looking good. And I feel it is looking far better at this point in time when valuations across the board are slightly rich, and there's a lot of there are a lot of questions around whether this is the right time and right levels to enter. You'll realize that the mid and the small cap segments are relatively under researched. Okay, and not everything in the mid and small cap pockets are thoroughly researched, and the prices are not efficiently priced in. So of course we are in if I were to categorize it slightly loosely, we are in a semi strong efficient market at a very overall level, but especially in the mid and small cap segment this is far more pronounced. So anomalies are not very effectively priced in. Mispricings could stay in for longer. There could be certain value traps. There could be certain red flags that may go unnoticed due to limited coverage, limited research, etc. So you don't want to just buy the entire basket. Okay, you want to rely on fund managers who have the ability to select very good stocks and very good pockets, wherein there is a lot of value within it. So there are two approaches. The first approach is, instead of finding a needle in a haystack, just buy the entire haystack. But at some point, you would need that needle to get your job done, right? Or else you take another path and you wait for you wait it out. You go through the entire pain and efforts where the fund manager tries and really identifies that needle for you, and then you go and participate in the upside that that needle is providing, right? So these are the two strategies that one must very consciously make a call on. And one must understand that one is not a substitute for other. It all really depends on how are you positioning it within your portfolio and what are your expectations from such an allocation.
Exactly. So the kind of homework an investor needs to do, especially at the time where people are really banking on mid-cap and small-cap funds as far as their portfolio strategies are concerned. Thank you so much, Nirav, for once again being on the show and helping our viewers with their strategies in mid-cap and small-cap. We'll slip into a quick break, but then post that we'll be joined by Anil Rego, who will be focusing on our viewer queries. So if in case you are our viewer and you're watching us live also, in fact, on social media platform, or maybe even on the channel on television, you can send us your questions through our WhatsApp number, and you can also email us your questions. Also, we are live on all the social media platform. If in case you're watching us on YouTube, you can send the questions on our comment box as well. And, we will present that question to our expert who will do your life financial planning on the show. So see you after this break.